Today feels heavy, and that's usually when people make their worst decisions. Bitcoin's pulling back, Ethereum's under pressure, Solana, XRP, same story, and somehow the internet has decided this means everything is over again. But here's the thing. Fear doesn't show up at tops. It shows up when uncertainty meets impatience. Macro headlines are loud. Central banks are talking. Schedules are flying around X like gospel. And once again, traders are being asked to react before they understand. Today's show is about slowing that down. We're going to look at what the market is actually doing, what the data is really saying, and where noise ends and signal begins. This is the SENB Daily Brief for Tuesday, December 16th, 2025. Let's get grounded.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, let's start with the market itself. Not the headlines, not the narratives, just price, structure, and sentiment. Because before you react to the news, you need to understand where the market already is. Bitcoin is currently holding in a broader pullback structure, not a breakdown. On the daily chart, price remains below the short-term moving averages, but still well above major long-term support. This is consolidation under pressure, not panic selling. Ethereum is showing a similar setup. Lower highs, compressed range, and momentum cooling, but no decisive loss of macro structure. In other words, weakness without collapse. Solana and XRP are following the same rhythm. Trend channels remain intact, but price is hugging the lower end of those ranges. This is what markets look like when liquidity pauses and traders wait for confirmation. Now, zooming out for context, Bitcoin dominance remains elevated, sitting near the upper end of its recent range. That tells us capital is still favoring Bitcoin over riskier assets, which is typical during uncertainty. And sentiment? The fear and greed index is firmly in fear territory. Not extreme panic, but enough fear to shake out weak hands. Historically, this is where bad decisions are made and good positioning quietly begins. So that's the market doing what markets do, pulling back, testing patience, and forcing people to choose between emotion and discipline. Now let's talk about why the noise is getting louder, because the headlines this week are stacked, and not all of them deserve your attention. That's next. Today's news and macro headlines. We'll be right back.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, now let's get into the headlines. This is where context matters, because news doesn't move markets in isolation. It moves markets when it collides with positioning. So let's walk through what actually matters today. Starting with macro. Federal Reserve commentary continues to strike a familiar tone. Inflation risks still tilted upward. Employment risks still tilted downward. Translation? No clean path. No easy pivot. No sudden policy miracle. Which means markets remain sensitive to every word, even when nothing materially changes. On the liquidity front, we're seeing scheduled Treasury operations and Fed balance activity that traders are watching closely. These aren't surprises, but they do influence short-term volatility, especially in thin conditions. In crypto-specific news, institutional activity continues to expand quietly. JP Morgan announcing a tokenized money market fund on Ethereum is not hype, it's infrastructure. This isn't about price tomorrow, it's about plumbing for the next decade. We're also seeing broader access developments, with major platforms adding futures exposure and expanding product offerings tied to crypto assets. Again, not bullish fireworks, but steady normalization. On the flip side, data around network activity, particularly on Solana, is being widely shared without nuance. Declines in active traders don't automatically mean failure. They often mean speculation has cooled, which historically is how real usage gets built. Now let's zoom in, because this is where the noise actually starts. One of the loudest narratives on X today is the Fed is injecting billions this week. That headline is technically true and practically misleading. What's being referenced are scheduled Treasury operations, bill purchases, and routine balance sheet mechanics. This is not emergency stimulus. This is not QE. And it is not a surprise. Markets already knew this was coming. When you see Fed injects liquidity trending, always ask, is this new or is this scheduled? Another headline making the rounds today, Jerome Powell saying inflation risks remain tilted upward, which he has said, in slightly different wording, for months. The real takeaway isn't the quote, it's the reaction to it. Markets aren't reacting because Powell changed his stance. They're reacting because positioning was fragile. When price is stretched, any headline becomes a catalyst. Then we've got the Solana activity chart circulating everywhere. Yes, active traders are down significantly from peak levels, but peak levels happened during meme coin mania, airdrop farming, and hyper-speculative cycles. Fewer traders does not automatically mean less value. It often means less noise, which builders tend to prefer. This is a classic example of data being used to tell any story the poster already believes. On the other side of the spectrum, we've got institutional headlines. JP Morgan launching a tokenized money market fund on Ethereum. Charles Schwab expanding crypto-linked access. Ripple securing regulatory milestones. These aren't moon signals, they're infrastructure signals. Institutions don't chase candles, they build rails. So here's the pattern. X amplifies extremes. Algorithms reward emotion, and traders weaponize headlines. Buy the rumor, sell the news. Count on retail to react late. Which is exactly why verification matters. And why one unverified headline can dominate an entire trading day. So those are the headlines, a mix of macro caution, infrastructure progress, and selectively amplified fear. And this is where things get interesting, because today, once again, social media decided to run ahead of reality. Rumors, timelines, breaking news that wasn't actually breaking. Next up, we're going to slow that down. Let's talk about what's real, what's noise, and why verifying information matters more than ever. That's today's deep dive, coming up next.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, let's slow this down. Because if you only read headlines today, you'd think the market is on the verge of either collapse or ignition. And somehow, both at the same time. Now, I'm not quoting one specific outlet here. I'm showing you the kind of headlines circulating today. And one of the most shared headlines today reads, "Crypto slides as risk-off sentiment returns to markets." That sounds dramatic, but what does it actually mean? Stocks are modestly red. Yields are stable. The dollar is not ripping. This isn't panic. This is positioning. When headlines say risk off, always check whether capital is fleeing or just waiting. Another popular one today, altcoins bleed as Bitcoin dominance climbs. Bitcoin dominance is near 59%. Fear and greed is sitting at 22, solidly in fear. That combination isn't unusual. It usually means capital is consolidating, not exiting the ecosystem. Alts don't die during these phases. They go quiet. Headlines today also love the phrase, Ethereum struggles below resistance. Ethereum is sitting under long-term moving averages during a broader market cooldown. That's not failure. That's compression. Markets don't move in straight lines. They coil, especially when sentiment is fragile. Notice the pattern. None of these headlines are false, but none of them tell the full story either. They describe what price did, not why capital is behaving the way it is. Headlines explain movement. They rarely explain structure. Here's what today is actually showing us. Liquidity hasn't vanished. Institutes haven't left. Builders haven't stopped. What has changed is patience. This is a market asking participants, are you here for conviction or comfort? And this is exactly why we don't rush narratives, because the loudest days are rarely the most important ones. Which brings us to the best part of the show. Let's hear from you. The questions, the hot takes, the confusion, the conviction, straight from the community. That's next. Proof of Thought mailbag after this.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, let's do this. Time to open the mailbag. And yes, I do read the usernames first. This one's from @BuyTheDipBros69. Bitcoin's going to 65. I'm waiting for the real crash before I buy. Of course you are. Here's the thing. Markets don't announce bottoms. Waiting for the real crash usually means buying after the bounce. But hey, great username. Next up, @MacroWizardActual. Strong confidence in that handle. Why does it feel like every influencer suddenly agrees the market is doomed? Because fear performs. Algorithms love emotion. Calm doesn't trend. If every account you follow sounds identical, you're not early, you're synchronized. This one's from @ChoppedAgain. I feel that. Is this just another fake breakout? I'm tired of getting chopped up. Totally fair. Chop happens when conviction is low and liquidity is thin. That's not a signal to trade harder. That's a signal to step back. Sometimes the best trade is not participating. From @VerifyThenBuy. Already like where this is going. How do you tell what's real news versus hype on X? 3 quick filters. Is the source original? Is the info new or scheduled? Who benefits if you react immediately? If the answer is someone farming engagement, maybe don't mortgage your conviction on it. Last one is from @RetailGetsWrecked. That name has lore. Feels like institutions always win and retail always loses. Institutions don't win because they're smarter. They win because they're slower. They wait. They size properly. They don't trade every headline. Retail doesn't lose from lack of access. It loses from lack of patience. All right, keep the questions coming, and yes, I will keep reading the usernames. Now, while markets debate and timelines argue, we've been building. Let's talk SENB. Covering it quickly, next.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, let's shift gears for a moment. While markets argue and timelines panic, we've been building. First, a quick snapshot. SENB launched on November 7th. Price is moving where early-stage projects move. Volatile, thin, and emotional. And no, we're not going to read out a number with 4 zeros and a dissertation attached to it. Price is not the story right now. Engagement is. Views across platforms continue to trend upward. YouTube is growing. Audio listens are increasing. And community participation is steady. Not explosive, sustainable. On the music side, Ember Vale's full album, Signal Through the Noise, is now live across all major streaming platforms. People are listening, not just clicking, listening, which in today's attention economy actually matters. Ember is now active across Instagram, TikTok, and Snapchat, with tracks available for creators to use directly in their posts. That's reach without chasing trends. Behind the scenes, we're already working on the next album. And yes, there will be at least 1, maybe 2 singles before the end of the year. Soon, but not rushed. And then there's the community event, the one we've been hinting at. No details yet, no hype thread, just execution. Let's just say Santa might be early this year. This is what building looks like. Slow when it needs to be, quiet when it should be, and intentional the entire way through. All right, let's wrap this up. Final thoughts coming up.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
Days like today are a good reminder. Markets don't reward speed, they reward patience. They don't reward certainty either. They reward preparation. And they definitely don't reward reacting to the loudest post in your feed. Zoom out when things feel chaotic. Verify when headlines feel urgent. And remember, volatility is not a verdict, it's a process. To everyone tuning in, asking smart questions, and actually thinking before acting, thank you. Tomorrow and the rest of this week, we'll keep digging into the stories that matter and the narratives that don't. More context, more signal, less noise. Until next time, stay patient, stay curious, and we'll see you tomorrow. The SENB Daily Brief is a production of SENB Media in collaboration with Whole Shot Coffee, coffee that fuels champion. Written and hosted by yours truly, SENB Hero. Production editing and scheduling handled by Maya Valencia, who somehow keeps me on time, caffeinated, and occasionally polite. Original theme music composed and produced by Paul Hahn, the community legend whose beats hit harder than a Fed rate hike. Research support provided by the SENB community. Proof that sarcasm and spreadsheets can coexist. For more shows, merch, and on-chain chaos, visit SENBHeroMedia.com. Thanks for tuning in. Stay caffeinated. And remember, if it's not in the brief, it probably wasn't bullish anyway.
Set my wallet free.